There's now over $11 trillion of people's money invested into ETFs.
Wow.
If you keep on adding to your pile and you don't take out of it, the differences over a number of years are absolutely incredible.
I haven't tried trading before. I'm trusting you, Rich, to take me on this journey.
We're going to have a quick intro today into the background, maybe some reasons to invest, how to invest, and what to invest in. And we're going to show how everybody out there, if you're trading for the first time, then what are the important things to look at? Now, Peggah, please introduce yourself to the world.
Hello world, my name is Peggah. I am the head of HR for the UK here at IG, and up until now, I've been using products like ISAs, like junior ISAs, things like that, and really just putting money away and not thinking about it, waiting until the day I might need it. Okay.
So first of all, we're going to look at those reasons to invest. The first one, of course, is to build wealth, right? Over a period of time, there's something called compounding, right? Building wealth over a long period of time is made so much easier by this compound interest effect, and the results are absolutely staggering. If you invested $1 into the S&P from 1950, if you took out the dividends every year, then you would now have $341.
Wow, that's still pretty good.
It's good from $1, right? But if you reinvested the dividends, you'd have over $3,000.
Wow.
So that is the effect in this compound effect, right? If you keep on adding to your pile and you don't take out of it, then the differences over a number of years are absolutely incredible. So I mentioned dividends there. Reason number 2 to invest is to generate an income. So if you do need to have some kind of income, right, which is really nice to get passive income from, then you can use those dividends to supplement a monthly income. We've also got reason to protect yourself against inflation because, of course, you want that interest rate or the dividend yield to be higher than inflation. And then lastly, to diversify your savings. But what about how to invest? So you mentioned ISAs earlier, but a lot of people go into a fund manager. So, especially when it comes down to like your pension.
I didn't even think about that as when you asked me about my different investments, because again, I just sort of put the money in and don't think about it, but I should be taking a more active role.
To build that up over time can be best done through a fund manager. Because if just at this stage, if you're just learning, then the fund manager can be very useful in looking after. But they are the professionals after all, right? But it can be expensive. So always check your charges of a fund manager and see just how much that is. But as you said, you can look after your own ISA. You can look after your own SIP in this country, so self-invested pension plan. Now, next way to invest, which is what we're all here for the next 8 weeks with Peggah, is being more active and learning to trade stocks and shares. So the actual trading side of it. Now, is this something that you've tried before? Any trading in the past?
I haven't tried trading before.
Oh, I'm excited.
Yes, usually I put money and I just lock it away. And I've gotten some shares from previous employers, but again, just left it there.
So we're going to have a look over the next 4 weeks on trading stocks and shares, and then we're going to take it to the next level, Peggah. We're going to teach you some options and derivatives.
Okay, one step at a time, and I'm trusting you, Rich, to take me on this journey.
So that leads us on to what to invest into. Now, there's these things called ETFs. What are ETFs? Have you heard of those before?
Exchange traded funds, right? Oh, it says it there. Yes.
Well, but that's good. You said it before you saw it. What kind of ETFs have you been involved in the past in your longer term investing?
Yeah, so I have seen the S&P 500 specifically, so you can sort of buy an ETF that tracks this.
Very good.
index,
Certainly the most
or
popular one.
or the FTSE. The S&P 500 is the one I'd go for.
I first heard of these actually from Lehman Brothers. Lehman's were the first one to sell this idea of an ETF to me in 2007 when I was at a hedge fund, and we traded them, and they've just grown exponentially since then. There's now over $11 trillion of people's money invested into ETFs.
Wow.
That is absolutely incredible. Now, these cover a broad range of options, right? As you said, the index trackers, the S&P 500 FTSE, or you can dig down deeper and you're looking at sector exposures, right?
Okay.
For example, you can invest in tech, you can invest in mining, you can really get sector exposure into anything.
Okay.
Then there's thematic investing. Those themes, right? So clean energy, it was 2017. Then it was kind of robotics. And now everybody's clambering on artificial intelligence.
AI. Makes sense.
So if you can think of a theme, there's probably an ETF for it.
Okay.
Right. Then, of course, we look at potential commodities. If you had a keen view on anything, including gold. There's the precious metals. There's the industrial metals, and then there's even soft commodities. Single stocks, a little bit more risky.
Okay.
Off the top of your head, can you think of any single stocks that would be your favoured ones that you might have heard of in the past?
Well, I know there's a lot of talk about some of the US tech stocks. NVIDIA has gotten a lot of press lately, but even, Amazon, Microsoft, companies like that.
Okay. And any closer to home in the UK?
In terms of single stocks in the UK, I'm really interested in maybe Marks and Spencer.
Right. Okay. So the clothing sector as well. I'm trying to build up this sort of idea. Right. So we've got home improvements.
Yes.
We've got construction, I guess, in some ways for the house as well. The clothing sectors. What else do you do in your spare time?
School is constantly out in this country, so I feel like
a lot of holidays.
I'm consistently, looking for affordable holidays. So maybe something like the airline sector or...
Excellent. Okay, great. So, as I say, what we're going to do over the next, 4 to 8 weeks is we're going to build this portfolio for you. But the market's at all-time highs. So I want to be fair to you. Right? I want to give you the chance to run a balanced portfolio, right? We call it a market neutral portfolio. So it doesn't matter if the market goes up or down, you'll still have the chance to have both a long and a short, because we're going to do this through either CFDs or spread betting, so you can short stocks as well.
Okay.
So next week, we're going to teach you what does shorting mean? How do you benefit from a stock going down or a commodity going down, as well as up. So we're going to choose 2 names each week to put into your portfolio, but I'm not going to let you sell them.
Okay.
So I don't want sort of I don't want this to be short term, tick, 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 tick. We're going to think about, right, how do we go through maybe the fundamental outlooks of a company, have a nice medium term look, so we can build that portfolio and we can test it every single week.
Sounds good. And then I don't have to be tied to my laptop all day.
Exactly. And I don't want you
checking
stressing.
share prices.
Yeah, exactly.
Sounds
So,
good.
does that sound good?
Yes.
Would you like to come back next week?
I'll see you next week.
It's been an absolute pleasure to have you on.
Thanks
And
so much.
I look forward to building this over the weeks to come.
Me too.
And thank you very much.